Today we're going to talk about a company called Twilio, and I wanted to start this out with something light. So if you've served time in a large corporation, then you probably would have came across this game. It's called Bullshit Bingo. So you take this card here, and when you're in a meeting, you go ahead and check the boxes every time you hear a particular buzzword used. And as the rumor goes, when you have a line straight up and down, side to side, or diagonally, you're supposed to stand up and say bullshit. That's because the person that's using so many buzzwords probably doesn't have a clue about what they're talking about. And when we go to analyze Twilio, we're really tempted to pull out one of those cards because there's a lot of buzzwords. So you see here under the About Us page, their mission is to unlock the imagination of builders. This isn't Disney. We don't have any clue what that means. In the following sentences, they talk about how they're the customer layer for the internet. So that gives us some clues. And when we look at their corporate website, what's quite interesting is that they have a link right under About Twilio, which is what is Twilio, because they've anticipated that nobody looking at that vague mission statement will have a clue about what they're talking about. So Twilio, under that second link, describes themselves as data-driven customer engagement. Okay, that's getting better. And it says engage every customer personally on a single platform. And then up at the top here, we came across a developer who had put together a FAQ a number of years back and properly described it as enabling developers to build real-time communications into software applications. Much better. And then this statement that the company says, we can't wait to see what you build. That implies that their clients are building things on top of their infrastructure platform, which is quite true, although Twilio is starting to migrate in the direction of providing their own apps. At the bottom here, we described the company in the best way we could. After spending a great deal of time pouring through their collateral, we say, Twilio helps companies communicate with customers across all channels in a personalized manner. So when we send emails out to our subscribers, the extent of the personalization we use would be somebody's first name, whereas they're now able to send personalized, let's say much more personalized messages across a client base. And when we look at this diagram, this is also helpful. Again, going back to that developer who had said that the internet is not connected to the telephony network, makes sense. There's 194 countries in the world, each with their own mobile carriers. Twilio sees its place in between these two networks, makes sense, between the internet and telecoms. And it says Twilio does the hard work of providing a bridge between carriers and the internet. This diagram sort of spells that out. So real world use cases, they've given some examples here. Shopify, being able to communicate with customers, Nike, voice, SMS, and email API. So that all seems to make sense. And when we look at who's using the solution, we can see a broad number of companies across various industries, and they actually provide a breakdown of this. Now, I've never seen politics listed as an industry anywhere, certainly not in the GICS classification, and that just talks to this firm's desire to engage in politics and divisive things like DEI. So that's a big red flag. Now, when it comes to diversity across real industries, you can see that the largest one they service there would be IT, and certainly there's a good mix in terms of company size. Now, when it comes to understanding a business, Warren Buffett once said that he would never invest in a company based on a report somebody else wrote, because then if he loses money, then he can't explain why, and it was based on following someone else's advice. And we take exactly the same approach. If we can't fully understand a company, we would never invest in it, nor do we want to be the interpretive layer between retail investors and a company. So that comes down to investor relations. And this report here is an example of what Buffett was talking about. It says Twilio dominates the CPaaS market, says River Park Funds. And you read this article, it talks about how Twilio is a leader in somewhere around 50% market share. And CPaaS stands for Communication Platform as a Service. That sounds pretty intuitive. This sentence says that such platforms require deep internetworking with carriers. That's the barrier to entry, along with distributed IP and cloud assets to deliver quality voice calls and messages. Indeed, they do. And when we look at on the right-hand side here, IDC MarketScape, describing the CPaaS environment, you can see they also list Twilio up there in the upper right-hand side alongside some of their competitors. On the left-hand side here, you can see how Twilio describes themselves, being a player in communications, where Stripe is a player in payments and Amazon's a player in cloud. Well, in all of these cases, what we have in common is that there's a lot of different companies trying to get a piece of the total addressable market. So that's certainly similar in the case of Twilio. They have a decent number of competitors, and when we try to find another list, that becomes difficult. So while they may provide a contact center as a service, they're not found on that Gartner quadrant. Companies like NICE are. We've covered NICE before. And I'll put a link to that piece in the description of this video, alongside the research piece used to produce this video. On the right-hand side, you can see this label, Unified Communications as a Service. Sounds much more like what Twilio does, but they're nowhere to be found. And when you read this report, as we did, they're also not even mentioned in the report. That's all very odd, and we couldn't find any of the Gartner quadrants containing information about what this company does. It could be because their service offering is becoming quite fragmented. So I've pulled these 3 charts out from various decks, and I wanted to make the point here of how the verbiage starts to become very confusing when you try to make sense of it. So they use this pie chart on the left talking about usage-based versus non-usage-based. The idea being that the former is lower margin and more commodity, while the latter may be higher margin and more specialized. And if you look in the upper right-hand side at these charts, you can see where they've broken down different categories: email, app services. And if you look at, and of course, messaging, you see there at 45% of revenues in the first half of 2020. By the way, this is the most recent investor deck we could find, though they're having a new investor presentation, I think, next month. But when you look at app services, the chart on the lower right here, you can see that suddenly app services now becomes messaging software. So when they talk about messaging, you can see how unclear everything becomes very quickly. And that's largely because they've been making acquisitions. 2 slides later in the deck we pulled that last chart from, you see here that they acquired this firm for their email capabilities that suddenly appeared, and that they're able to increase customer spend following that acquisition. And this dollar-based net retention rate across the firm we'll look at in a second, but I wanted to point to their acquisition. So SendGrid was that email acquisition. Segment was the most recent. That's personalized customer data. And also you see here additional capabilities, IoT. Well, good luck trying to find out where those sit in that mix of things that we looked at in the previous slide, because we certainly weren't able to. Maybe it was a side project or something that worked. It doesn't seem to be a big focal point, let's say, at least yet, for the company. What these acquisitions have resulted in is $5.2 billion in goodwill. That's a lot for a $13 billion company. And everyone who remembers what happened with Livongo will certainly know why that's a problem. You can look at our piece on Teledoc. We did a video that describes the problems with goodwill. Now, getting back to dollar-based net expansion rate, this is a classic chart that CB Insights would call the +1. It's total shite. So their scale is way off. You see how 132% on the left, and it goes up a bit, and then it goes all the way down to 123%. But look at the difference between those 2 bars. So they've fudged the scale to make this look a lot better than it is. We don't like when companies do that. So it's just going back to that bullshit bingo card. Now, when it comes to quarterly revenue growth, and if you look at this across, let's say, since the company had their IPO, it's been absolutely tremendous, though the pace of growth is starting to lag. You can see that sequentially last quarter, there was 7.7% growth quarter over quarter, and that their year over year for these quarters is declining over time. That's to be expected, right? So all firms are going into more difficult environments trying to get a signature on a contract, though the great part about this business is that they don't really require that. So you simply pay as you go, and that's good for the customer, certainly, but the lack of contracts means that potentially they could be displaced more easily. Now, when it comes to looking at things like survivability, their margins vary according to services. You can see the spectrum here. App services, somewhere around 89% margin. And on the left, they haven't given any indication of what those look like, but blended gross margin in 2021 was around 50%. That's not bad. They have $3 billion in cash, net of their billion in debt. They burned $500 million so far for the first half of this year. So let's say they have 7 quarters left of runway. Now, when we look at their investor days, that's coming up, as I said, in November, and the last one was in 2020. You can see here that they provide this great chart, SaaS firms do, of the various buckets, but look at the legend. The buckets refer to 3 years ago versus 2020, and that's rather misleading. Typically, you'll see these buckets presented year over year, and we'd certainly like to see that. So the investor relations department for Twilio is severely lacking. Now, when it comes to the value of this company and the time to buy, look at this chart. It shows the performance of Twilio against the Nasdaq since they had their IPO in 2016. 58% up compared to a Nasdaq return of 156%. So Twilio has lagged the Nasdaq. They have a simple valuation of 3. That's quite low. So now would be a time to consider buying this company if you were apt to. And it's quite remarkable to see how high they spiked from 2020 to, let's say, earlier this year. So just to conclude, the firm needs better investor relations. It's very difficult to understand. We wouldn't expect any retail investor to be able to make sense of it. And we came away, honestly, with more questions than answers. Shares seem to be fairly valued and have shed their hype, that's for sure. But this isn't a company we understand well enough to ever consider investing in unless they were able to totally revamp how they present their metrics and how they describe what they do to their investor base. So please leave your comments in the comment section. Make sure to subscribe to our channel. Thanks so much for taking the time to watch this today.